Hello, good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to be talking about down payment assistance program. So, great topic here. Definitely something that's requested to go over a lot. So, we'll go over our live rates here shortly, and then we'll do our deep dive into down payment assistance loans. Give us just a second here to go live on all the different platforms, but we appreciate everybody tuning in nice and early. Go ahead and drop a comment there in the chat. We got it pulled up on the screen. Definitely appreciate it. You can also drop any questions you have there as we go through the presentation here today. All right, it looks like we're live on all the platforms, so we'll go ahead and get it started. What we'll do here is we'll take the chat off the screen for now, but again, keep dropping comments there in the chat. Drop any questions you have in the chat as well, and we'd be more than happy to answer them. All right. So, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates. And then we do a deep dive into a different loan topic. And today's loan topic is going to be down payment assistance programs. Again, definitely something that a lot of people inquire about. Especially newer loan officers wanting to kind of get a grasp on it. So we'll go over that here shortly. But before we do that, we'll go over our rates. So Nick, if you're ready, let's go ahead and pull up the live rates for today and see what they are looking like this morning.
All right, I'm going to refresh the page actually before I pull it up. Lots of news yesterday and today. Not too much movement, but a lot of news going on here. All right, so I have the rates pulled up for today. We will check out all the different programs and compare the APRs. For today, it is July 10th, just after 11 a.m. Eastern. So most of our programs here have our live rates for the start of today. And we will compare those across the program for a standard scenario. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with our team members. We have over 300 loan officers that would be happy to send a full loan estimate. Now, the scenario we will use before we pull these up is going to be a standard purchase for a single family home, 500,000 purchase, 400,000 loan amount, corresponds to 80% loan to value, 20% down payment. Use an estimated 760 credit score for all the demos and an estimated 40% debt to income ratio here for all the demos. So with that being said, let's check out the options for today. And the first option we always review is our 30-year fixed conventional option for a primary home, typically the most common loan that most people think of. Rates as low as 6.49, final APR 6.802. Not much movement. Went a little up yesterday, went a little down this morning. Not much movement overall, but that's typically good. Hopefully we see it continue to move down as it has been favorable this morning. Now, if our customers don't qualify for a conventional option, the next option we typically want to present is an FHA. FHA allows more leniency on credit issues as well as a much higher debt to income ratio, but it does require upfront and yearly mortgage insurance. Rates today come in at 5.75, final APR with all of the fees included 6.711. So notice if our customer qualifies for both and is willing to do the mortgage insurance, sometimes FHA may be comparable. And our customers that need to use the FHA, definitely a great option as it is very comparable here to conventional. Now moving on to our VA options, that's only for our eligible vets and active service members. If you are eligible, these are amazing programs. We did see some movement here, rates as low as 5.99 today. Final APR at 6.289 with the standard fees. Notice if we're comparing that to FHA or conventional, VA is always going to be more favorable. So definitely the best option for our eligible vets and active service members. And the final standard option, agency government option, is a USDA option. USDA is only for properties that are in USDA eligible areas. So if our borrower and a property is eligible, these are some great options. USDA comes in at 5.75 today, final APR at 6.512 with all of the fees included. So usually our customer will be comparing a USDA option to an FHA option. So if it is eligible for USDA and our borrower is eligible, USDA will typically beat FHA by a touch as well as beat conventional by a touch. So great option for our borrowers that are looking in those areas. Now, those are the standard programs. If any of our borrowers don't qualify for these standard programs, typically other banks or lenders may have to deny them, but we have over 5,000 additional options here First up, our 30-year fixed non-QM alt doc option for a primary home. So if our borrower doesn't qualify for a conventional option or any of these other options, needs to use alternative docs such as bank statements, 1099s, asset-related programs, P&L programs. We have all kinds of different options. This option here, most likely a bank statement or similar, comes in today at 6.875 rate, final APR 7.19. And notice we're typically within a half a point of conventional to use alternative docs. So great option here and is very comparable for our customers that need to use it and still get that home they really want. Now moving on to our non-QM options for investment properties. So first up, a typical alt doc option such as bank statement for our investors out there. Rates as low as 7.25 today. Final APR comes in at 7.589. And we'll compare that to the other investment property options. So there are no government programs, so no USDA, no FHA or VA options for investment properties, but we do have our conventional agency option. Rates today coming in at 7.25 for an investment property. APR 7.611. So notice non-QM alt doc beats it by a touch today, but definitely recommend all of our investors check out our favorite programs, our DSCR options. DSCR stands for debt service coverage ratio. No income or employment needed. We simply use the estimated rents from the appraisal to determine a DSCR ratio. The rents can cover the expenses, aka the property will cash flow. That is a ratio of 1 or higher, which is preferred. For our demos here, we use a ratio of 1.5 so we can see all the programs. With a 3-year prepayment penalty, which is standard, rates come in today 6.999, pretty amazing. APR of 7.341. So that beats the conventional option as well as the alt doc option, which is pretty amazing. And our programs that allow a 5-year prepayment penalty can get even better here. 6.75 rate. Final APR comes in 7.072, which beats these options substantially. So definitely a great option for our investors. And the final DSCR option is a no prepayment penalty option. Some states don't allow a prepayment penalty, and some investors don't want one. No problem. Rates come in today 7.5. Final APR 7.953. So that's just a touch higher than conventional. So typically our investors will prefer a DSCR and definitely recommend, if they are able, to check out the prepayment penalty options to sweeten the rate a little bit. And the final 2 demos we always do here are 30-year fixed second mortgages, very popular these days as many customers have a low rate first mortgage that is lower than the current rates and want to keep that but still need some cash out. No problem. We have our non-QM second mortgage options for a primary home. So that also means we can use bank statements and similar, coming in today at 8.125 rate. Final APR 8.278 to get cash out of a primary home without touching that first mortgage. And same option here for our investors, 30-year fixed second mortgage for investment property. So investors can get cash out without touching the first mortgage. Rates as low as 9.875, final APR 10.154. So these are great options. Again, non-QM options, so it could be bank statement or similar. And many of our investment properties are not eligible for HELOCs, which are typically the other options to get cash out. So great option for our investors here. Let's go ahead and switch the screen and take it back to our primary options here. And today we're going to be discussing DPA, down payment assistance. Definitely a popular request. Jose touched on it yesterday for our first-time homebuyer options. Definitely a popular request for our first-time homebuyers, but is not limited to first-time homebuyers, which I'm sure Jose will explain here. So down payment assistance, there's a couple ways to do it. So Jose, please explain a little bit more in general, and then let's check out the options that we have.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Yes, I definitely wanted to emphasize that our down payment assistance program, which is a national-based program, not a local program subject to local restrictions on income and participation by the individual lenders or loan officers, right? This is a national program. No income restrictions for this program other than the regular underwriting guidelines for whichever program is being selected, which, by the way, the only 2 programs that we have that are applicable loan types are FHA and USDA, right? No, we do not have a conventional option for this down payment assistance program. So no income restrictions from the program, no needing to apply to any particular agency to be able to participate. And most importantly, what Nick just mentioned, you do not have to be a first-time home buyer to participate and be able to take advantage of the down payment assistance or closing cost assistance, which is also offered. There are two different types. Now, let me state the difference between the down payment assistance option and the closing cost assistance option. On the down payment assistance option, we have two ways it can go. The first option is forgivable, which means that the down payment is offered as a forgivable second mortgage. No payment has to be made, no interest accrues, but it is a lien on the property for the amount of the down payment assistance. If after 60 months, which is 60 payments, 5 years, if the loan is still current and the borrower still lives in the home, then that down payment assistance loan can be forgiven, right? Free money. On the repayable option, the assistance, the down payment assistance is offered as a 30-year amortization loan with a balloon in 10 years, meaning that after 10 years, you have to pay it off. So it would be refinanced, or if you have the money on hand, you just write them a check. However, normally these loans are refinanced way before the 10-year time comes up, because typically the rates we would expect to go down, and then the borrower will be able to refinance the first and the second, if their credit permits, an income into a conventional loan, eliminating the mortgage insurance, lowering the rate, and consolidating the two loans into one, right? Now, the other critical thing to note about the down payment assistance option, whether it's forgivable or whether it's repayable, is that it allows the borrower to use that money as their minimum funds contribution to the loan, right? Through the 3.5% down payment. That means borrower has to come up with at least 3.5% of their own money in regular FHA loans. But if down payment assistance is used, then that is used for the borrower's minimum cash contribution to the deal. So if you can negotiate the closing costs to be paid by the seller, maybe a little realtor contribution, however you may get to the objective, then you could essentially have a transaction with no money having to come directly from the buyer, right? So that's a very important thing to note. On the closing cost assistance option, there is a 3.5% minimum contribution from the borrower, which is the down payment, and then the rest of the money for the closing costs and other transaction expenses could come from the closing cost assistance. So that's a critical distinction to note, right? Because if you get the 5% closing cost assistance, you cannot apply, let's say, 3% to the closing costs and 2% to the down payment. It doesn't work that way. You would only use the 5% or the 4% option rather than the 3% closing cost assistance option if the closing costs are that high and you need the extra money. The other thing to note is that the forgivable option has a 620 minimum credit score, and the repayable option has a 660 minimum credit score. So closing cost assistance is repayable, also 9.99% interest rate, 30-year amortization, 10-year balloon, and the repayable down payment assistance also has a minimum 660 credit score. Now you ask, why would someone pick the repayable option instead of the forgivable options if the repayable option has a higher credit score and it's repayable? Well, the interest rate is much lower. So in the analyses that I have done, comparing the two, when you compare the total payment of the first mortgage payment at the higher interest rate for the forgivable option versus the payment for the repayable option plus the closing cost assistance second loan, that combined payment is usually lower overall than the payment on the forgivable option, because the interest rate is usually going to be at least 1% difference. So depending on your loan amount, you could have a couple $100 difference, whereas the forgivable, the second mortgage loan payment is not that high. So you may have like a 70, 80, 90, or $100 benefit, lower payment using the repayable option, and simply the borrower may not qualify for that higher payment. That's what it boils down to. So let me go ahead and share my options with you, because I have a down payment assistance option as well as closing cost assistance option. So we do have USDA options, which is amazing, right? So this is a true cashless transaction here, because it's 100% LTV, and you can use the DPA for closing costs, right? There is no limitation that the down payment assistance can only be used for down payment if there's no down payment required for USDA. So in this case, this one gives you the most bang for your buck here, right? 3.5% forgivable DPA, minimum 620 credit score. 8.75 is your lowest cost option at a cost of 1.25 points. And you can buy that down to 8.125 at a cost of 2.5 points for your USDA down payment assistance forgivable option, right? The free money. And under USDA, we do have now a repayable option. There is no closing cost assistance for DPA, but we have the repayable option. There's a repayable option of 3.5%, but I did not share that one with you because the cost and the interest rate is exactly the same as the forgivable option, right? So why would anyone pick repayable 3.5 if you have forgivable 3.5 for the same cost and a lower credit score? However, our repayable option for 5% for those USDA properties with higher closing costs, where the borrower wants to benefit from this, you have 8.75 as your lowest cost option and 8.625 as your lowest rate option. Now let's go with our FHA down payment options here. Now I'm sharing with you first the repayable option. This is 3.5% repayable down payment assistance with a minimum 660 credit score. Now you note here 7.625 is almost at par, 0.375. That's what I'm saying. This is the best down payment assistance option out there, right? 7.625, almost at par, 0.375 cost. And you can buy that down all the way to 6.875 at a cost of 2.375 points, which is awesome. And now our 5% repayable down payment assistance here, right? You can put 3.5% to the down payment, 1.5% to the closing cost. 7.625 is our lowest cost option, 1.125 points. And you can buy that down all the way to 7.125 at a cost of 2.25 points. And now our forgivable, those first two options were repayable, right? That's the second mortgage, 9.99%. This is forgivable, right? This is the free money option. 620 minimum credit score, 3.5% forgivable DPA. 8.75 is our lowest cost option at a cost of 0.75 points. And you can buy that down to 7.625 at a cost of 2.125. So again, forgivable DPA on this one. And here is our forgivable DPA for a 2-unit property, right? Adding some additional twists here. So again, same option for the rates. 8.75 is our lowest cost option at 0.75 points. And you can buy that down to 7.625 at a cost of 2.125 points. So that's great news for our house hackers out there that want to buy that property, live in one side, rent the other, help you pay for the loan. And now with our repayable closing cost assistance, right? So 3% repayable closing cost assistance, minimum 660 credit score. Now you do see here that the rates get better, and the cost is cheaper as well. This is 7.625, almost at par, 0.125 points. And you can buy that down to 6.75 at a cost of 2.5 points. This is 3% repayable closing cost assistance. And please do remember, this option does require the borrower to contribute 3.5% minimum of the purchase price to the deal. The rest can be closing cost assistance. Now we have our 4% repayable closing cost assistance. 7.625 is our lowest cost option at a cost of 0.625. So you do see there's a half a point increase in the cost to get the extra 1 point. So you have a 0.5% in benefit for this option, and lowest rate option 6.875 at a cost of 2.5 points. And our last option, maxing it out for those expensive closing cost areas, right? Where you got to have expensive taxes, expensive insurance, escrows, and insurance and taxes and all that could make up a good amount of the closing costs. And here my screen is frozen, folks. So that option I cannot share with you. But do note that it is available. So please do look to the mortgage calculator for all of your down payment assistance. And remember, we have down payment assistance as well as closing cost assistance. No income minimum or maximum income restrictions on this kind of deal, and no requirement to be a first-time home buyer. But as always, USDA, here you go. Wait, my screen unfroze. 7.625 is costing 1.25, and lowest cost option 7.125 costing 2.25. And like I was mentioning also, these are for primary homes only, as always, for all USDA and FHA loans.
All right, I do not see any questions. So I think we can go ahead and wrap it up. A great topic to go over there.
Wait, I think we have one from Instagram.
Yeah, not really a relevant question here. They're asking if they got a USDA loan and they wanted to uh, essentially remodel and make improvements within your 205. That would not make it because you won't need to refi it to do some improvements unless you need the cash, and then you'd have to do a cash out. All right. I think that's it. I don't see any other questions, so let's go ahead and wrap it up. Remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different topic. So we appreciate everybody tuning in. We will see you tomorrow, 11 a.m. Eastern, for the next episode.